Hi, Mike Flores here, co-founder of Trade Prosper, and welcome to video 2 of section 7. We're going to start talking about the stop loss options for the 55-day channel breakout. Now, the stop loss that you will use will depend on the market that you are trading. So, for those of you who are trading futures, Forex, or CFDs, this technique will be your stop loss used for the channel breakout. It is called the last bar. So what does LB stand for? Last bar. What does PLB stand for? Projected last bar. Now this is a technique that was made famous by Peter Brandt. Peter Brandt is a legendary trader who has had over 30 years of proven and documented success in the financial markets. Now there's two parts to this stop loss technique. When it comes time to calculate your risk and place your initial stop, you will use the bar before the actual breakout, and this bar will be called the projected last bar. Let me show you an example on a chart. Okay, so what we have here is the E-mini S&P 500 futures chart. And you can see here I've already labeled some of the stuff. You're familiar now with the 55-day high and the 20-day high overlap one another. And you have here the 20-day low and the 55-day low below that. So what we're looking at now is we have a market that's going to have a 55-day high breakout. So let's take a look and see how we would use the stop loss in this example. So first, remember our first rule is we needed a sideways setup of at least 1 week or 5 business days. We have a 7-day sideways setup here. 1, 2, 3, 4, 5, 6, 7. Now we need a rising ADX or a blue ADX. We can see here on these days from here on, we have a rising ADX down here. So, therefore, as we get closer to the 55-day high, we want to place our order. So, let's use this bar, the latest bar. You would start putting your order on this day here, because this is the first ADX rising. But nothing happens on this day, so the next day you put your new order in. So your order is going to say to buy on a break of the 55-day high, which is 1698. You can see that to the right of the cursor. Now your stop loss for this will be what we call the projected last bar, and that is going to be the low of this bar. So in this case, that's 1,662.50. Now, why are we calling it the projected last bar? Well, it's projected because it hasn't actually broken out yet. The actual last bar will be the breakout bar. So let's recap that again. So you'll place your order to buy on a break of the 55-day high, which you can see to the right as 1698. Don't forget, now we are going to add the cushion, so you will have that level plus the cushion, and then you will put your stop loss order to sell and exit the market if the market goes below 1,662.50, which is the low you can see to the right of the cursor, minus the cushion. So this low on this day will be the projected last bar low. Now the next day we have the actual breakout. So now that the actual breakout has occurred, you will adjust your stop from this day's low to this day's low. Now you will have your stop as the low of the actual breakout bar. So now you're long on this day as you broke the 55-day high, right? We said yesterday that as of that day the high was 1698. Notice here the high of this day is 1700. So taking the cushion into account, we would have been long on this day. We would have gotten long on this day. And then at the end of the day, we adjust our stop to the low of this day, because this is the actual breakout bar or the last bar. Okay? I'll talk about how to adjust this stop in a moment. Let's look at a short example now. Okay, now let's look at an example from the short side using the 55-day channel breakout. This is a chart of the currency pair Australian dollar versus the US dollar. And just like before, we have to look for a sideways setup of at least 1 week. Here we have 13 days of a sideways setup. Notice the ADX has to be rising. Notice how the ADX went from rising blue to falling red, rising blue, falling red. You have to pay attention to this when you're placing your orders. So some days you would have placed an order and some days you would not have, due to the fact that the ADX was not rising. But on this day, the ADX was rising. So at the end of the day, you would have placed your order to sell on a break of this low. If you look to the left of the cursor, you would see that's 0.9239. And you'll buy at the high of the day, which is the projected last bar, at 0.9374, which you could see to the left of the cursor in the box. Okay, we have a rising ADX down below. You can see that blue. And you would sell on a break of this 55-day low. The next day, we break out lower. And now you adjust your stop from this high to this high on this day. And I'll show you how to adjust the stop again later on. But for now, that's exactly how you adjust the stop on the day that you break out. So this is the day we placed the order. This is the day we actually broke out lower. And you adjust the stop from the projected last bar to the actual last bar. And that's how you use the last bar technique and the projected last bar technique in order to place your orders. Now, for example, in this trade, we're in the trade, our stop is here, and you can see that the market goes way lower. So when do we adjust this stop loss again? Well, we adjust this stop loss again when we have another sideways setup. Remember, a sideways setup has to be 1 week of trading or more, so 5 days or more. So the next time that we get that, you can see the market starts to go sideways here. The black 55-day line is going sideways. And now you can see we have another breakdown. So what we would do now is the stop was back here. Let's go back for 1 second to look at it. The stop was back here all the way up at 92.89, but since the market broke lower, we would have now changed our stop to the high of this bar. This bar would be your new stop loss level, high at 0.8762. So now notice the next day it got close, but it didn't trigger it, because you had 0.8762 plus the cushion, and here the high was only 0.8755. So you would still be in the market and short the market, giving everything that I've showed you so far. Alright, that's it. I'll see you guys on the next video. Bye now.